Сьогодні у нас відбувається вебінар разом з German Economic Team. Ми поговоримо про те, як німецький уряд фінансує втрати, які отримує економіка через кризу. Вони зробили дуже цікаве дослідження, вони сьогодні презентують. Також виконавчий директор Центру економічної стратегії Гліб Вишлінський скаже трохи про те, як Україна бореться з кризою. І далі у нас буде можливість для того, щоб ми трошки поговорили, провели дискусію. Today we're having a webinar with our German partners and colleagues from the German economic team. Today we will talk about how the German government responded to the pandemic and how it financed the stopped economy. We understand that today all countries take their own approaches to solving problems associated with the quarantine restrictions, but also we need to keep in mind that the economy is too globalized to avoid collective strategies to overcome the crisis. So I wish us all productive discussion. Center for Economic Strategy will translate the main points into Ukrainian and will put it on our website. So I will present you Deputy Team Leader of the German Economic Team, Robert Kirschner. He will make some opening remarks for our discussion.
Yes, thank you very much, Andrei, and also a very warm welcome to the participants of this webinar, of this joint webinar on the German economic policy reaction to the COVID-19 pandemic from our side. Germany was affected at a relatively early stage by this crisis in the EU and rather quickly, I would say, adopted very strong measures to contain the negative economic impact of this crisis as much as possible. And that's exactly today's topic. How did the federal government of Germany react to this global shock? Which measures did it take so far and what is the outcome? Obviously, this is very much work in progress. As the crisis evolves, so does a policy reaction. But perhaps now is a good point in time to reflect on what has been done and if there are some lessons that can be maybe drawn also for Ukraine. I think this is something that we will explore later in the discussion. I would like to introduce the main speaker from our side. That's Dr. Riccardo Giucci, the team leader of the German economic team, who's sitting next to me. The German economic team is an economic policy advisory project for many, many years active in Ukraine and also other countries in the Eastern Partnership region of the EU and in Central Asia. My name is Robert Kirchner. I'm the deputy team leader. And I would actually like to give the floor now to Riccardo with the main presentation of
Sorry, we're having some technical problems, I suppose.
This is a presentation.
Can everybody see the presentation?
Yes.
Yes, perfect. Okay, so on page 2 you see the instruments, and we are here focusing on instruments for supporting companies. That's the main target, the main goal of the presentation. And as Robert said, we're only looking at federal measures. You know, Germany is a federal state, so the lender also have own measures. We have also measures from the European Central Bank. We have measures from the EU Commission, but we are focusing on the federal measures. As of today, this could change over time. And you see on this page, there are many measures, and I will start with what I think is the most important one for the labor market, which is the short-time work allowance on page 4. And here, I think this is a quite interesting feature in Germany, because if you take the point of view of a company and you are hit by the crisis, then you have to decide what do you do with the employees. And in many countries, you have two possibilities. You keep them and then you have to pay the wage, but you don't have the money for that, or you fire the person. Yeah? So that's the two options in many countries. In Germany, we have the so-called short-time work allowance. And that means that the employer, the company, can decide to have employees on short-time work. For example, a company is hit and they say, okay, my people will work now for 50%. Not 100, but not 0, but 50%. That's an example, could be another number. And then the employer will only pay this 50% of the wage, not the 100%. So there is a clear lower financial burden. And the rest is paid by the insurance and employment insurance, but not the full amount, but 60% of the net wage. Yeah. So at the end, if an employer is with 50% short-time work, this person would get about 80% of the old net wage and work 50%. Just a numerical example. And this instrument is very important. It was also flexibilized during the crisis. So the conditions are easier now to access. And actually on page 7, you see the numbers of that. And you see that actually we have already applications for 10 million employees, 10 million, and we have about a bit more than 30 million employees in Germany, and there are applications already for 10 million. So it's about 30% of total employment is now under short-time work. Yeah, and of course that's a very strong number. But imagine, of course, in case we would not have short-time work allowance, then many of these people would not be on short-time work, but they would have been laid off. And then we would have an employment rate which would be much, much higher. And in the chart top, you see the unemployment rate. Yes, it has increased in April from 5% to 5.8%. So there is an increase. It's quite strong for 1 month. But this is not the kind of increase as you see in the US or in other economies where the unemployment rate has increased very strongly. And the good thing about the short-term work allowance is, of course, the stability, the relationship employer-employee. So the person continues to work for the company. Once the temporary shock is over, then you can resume work immediately. You don't have to have a new process of hiring people and do the interviews and all that. The people is all the time at the company. Of course, for the psychology of the employee and the consumer, it means they will continue to consume. They will not start to save extremely much. That's weakening the economy. So it has many advantages. Of course, the disadvantage is the cost. The cost is quite strong. But if you don't have this cost, you would have the cost for the unemployment insurance anyway, so you wouldn't save much money. That's why I think this is a very good instrument, and also we could discuss later on if this is also an instrument which would be of interest for transition economies such as Ukraine, because as we understand, many companies in Ukraine have to decide 100 or 0%. We can discuss this later. Now, of course, this is on the next page. You see the measures beyond the labor market, because from the point of view of a company, you have cost for labor. This is on average about 69% of your total cost, and you don't have this cost anymore. But you have still costs for renting the premises. You have costs for maybe a car, for loans, for interest, and so on. So you still have money to spend and very little revenues, or in some cases no revenues at all. So that's why only a short-term work allowance would not be enough to support companies. And that's why other instruments were decided upon. And here the instruments are very much targeting different sizes of companies. And we start with the freelancers and micro enterprises being companies with up to 10 employees, not larger than that. And for this type of company, the government decided not for loans, but for grants. Yeah, that's quite particular, quite strong decision. These are grants. This is money that companies do not have to pay back if they use it and if they needed the money. And these grants are very simple. This is for companies up to 5 employees, is 9,000 euros for 3 months. For companies up to 10 employees, 15,000 euros. The application is quite simple. It is online. And what we have heard from colleagues or for people in the neighborhood, at least in Berlin, people got the money very quickly. I mean, we're talking about 2-3 days and the money was in the account. So very effective, very helpful, and of course, very expensive, of course, because this is a grant. This is not a loan. This is not a guarantee. This is money the government is spending. This is budgetary expenditure. Up to now, 10 billion were used for that, 10 billion euros, and we had 1.4 million applications. Yeah, that's the numbers, and the financing volume is much higher, so there is up to 50 billion, so there is enough money for this target group. And I think here the decision was it's more important to do it fast than to do it absolutely properly conceptually. Yeah, so it's a very rough instrument, I must say. And the criteria was not completely clear to everyone, and the criteria were changed all the time. But we are in a crisis situation, and of course, government had to react very quickly. Now we move to the other instruments, which are the KfW instruments. You know, KfW is the promotional bank in Germany for financial promotion. And they work normally, it's a 2-tier system, so they work with banks. They don't work with companies directly, but with banks. And they provide, as a rule, guarantees to banks for providing loans to companies. So it's a 2-tier system. That's important to understand. And here also we have different instruments. And here again, it depends on the size of the company. What is most popular, at least in the press, and which maybe also internationally was much talked about, are the so-called instant loans, KfW instant loans. They're called like this. Again, here, the role of KfW is not to provide the loan, to provide a guarantee to the bank. And the bank, the commercial bank, provides the loan to the company. So strictly speaking, these are not KfW loans, but guarantees. But of course, you need a nice name, and that's why they're called loans. And they're called instant loans because they're provided very quickly. And the reason for that is that no risk checking is necessary because the KfW takes over 100% of the risk. Yeah? So if the bank provides a loan and the company does not pay back, the bank gets 100% of the loan back from KfW. They have no losses. And that's why they don't need to discuss long about the balance sheets and about the perspective and all that. The banks provide the money quickly, and that's it. Of course, again, here, trade-off, fast, effective, and money and risk for the budget. Of course, it creates some risk for the budget because this money could be gone. It's not because you don't really check if the company needs it or if the company can pay it back. But it is effective and it works properly. And this instrument actually evolved from the experience with other instruments in which part of the risk was kept by banks, and this didn't work. Because the bank said, look, if I'm only taking 10% of the risk, but this 10% for me, it's a lot for many loans. And I have to do a complete credit check, risk check. And for that, I need time, and everyone wants to have the money at the same time, so I cannot do it very quickly. And that's how the government moved on and said, okay, 100%, and now you can do it quicker. But these are for relatively small loans up to 800,000 euros. So we're talking about small business, basically. Now, the standard instrument for the KfW on page 12, this is the loan guarantees, and these are for all companies. But in these instruments, part of the risk is kept by the bank, 80 to 90%. 80 is in case of large enterprises, 90% for SME. And these are much more sizable credits, up to 1 billion euros. So it's also for bigger companies. And also there is some streamlining. If the loans are up to 3 million, then the KfW will not make a risk assessment. You have also the details on interest rates. These are rather low interest rates and no repayment in the first 2 years. And then you have up to 10 years to repay the debt. So it's quite soft loan, I have to say. And the third part of the KfW instruments during the crisis are the so-called syndicate loans, syndicate financing. Here the idea is a company goes to the bank and says, I need money for different reasons. I have liquidity problems, I need a loan. And the bank says, okay, you get a loan from me, but they will get the KfW as a partner, as a syndicate partner to provide the loan, and up to 80% of the risk can be on the side of the KfW. And here we have some examples of names you surely know. Adidas got a 3 billion loan, and 80% is KfW, the rest is a commercial bank. Puma also got a loan, 900 million. You know, the car company which rents cars, Six, they got a loan for 1.5 billion, and also TUI, who organizes trips, so it's on the holidays business, 1.8 billion. So this is already working, and this is mainly for large companies. And the minimum for the KfW here is 25 million. So this is not for smaller companies. So to look at the assessment, please look at page 15. And the chart below first, you will see the number of applications. And you see the largest number of applications, 32,000, is for the small loans. And then it's much less, but in amounts of money. This is the upper part of the chart. In terms of money, of course, the big chunk is the big loans above 100 million, because this has a financially much stronger volume. And in total, we're talking about 33 billion euros already provided as loans and as guarantees by the KfW. Again, guarantees, not loans. Yeah? Some of this money will become budgetary relevant if the loans are not paid back, but hopefully most of it will come back after the crisis is over. Now, the further important instrument is the Economic Stabilisation Fund. This is a completely different instrument. And this was a fund which existed from the time of the international financial crisis. And this was just relabeled not to support banks, but to support companies. And it has 3 pillars. It has 100 billion euros for equity. So the German government, the federal government, can become a co-owner, a shareholder of companies, which is not quite usual, but it is possible. 400 billion for guarantees. So we're talking about very large companies which need guarantees, and also some more money for helping to supporting the KfW. And here, of course, the idea is to avoid that companies go bankrupt, but also to avoid takeovers from other countries. I mean, some countries have already now are in a much better situation now, are quite strong financially, and you don't want some foreign companies taking over half of the German economy or something like this. Yeah, so this is part of the idea. And the best example here is the Lufthansa, the air carrier. They are under discussion to get support of 9 billion euros. It's not a deal, but they are under discussion. Part of it will be equity, part loan guarantee. And the discussion, of course, is what will be the influence of the government on the company. And here we have different opinions. The more center-right part of the government, the CDU, they want to have a limited influence on the company. The more social democratic, the Social Democratic Party, who is also in government, they would like to have a stronger say in how the business is run, especially when it comes to possible laying off of employees. So now these are the main instruments, and maybe some very small like additional instruments. We have the export guarantees. You know, when German company exports to Ukraine, for example, the company can apply for a state guarantee for this export, a state guarantee. And the reason why state, because the private credit insurance market does not work for transition economies. And that's why this is a standard instrument. And now the government said, okay, in case now a company wants to sell to Spain or to the US or Canada, and the private market, insurance market is not working, then also the state insurance will take over. So this is just a standby possibility in case this private market is not functionally, that you can have the state. And the same applies for the supplier credits. Most of things, when transactions are done within Germany also, one company sells to another, instead of checking the solvency and all that, you just make an insurance. It's a very small amount, and you insure the amount of money which is paid, irrelevant whether the company will pay you or not. So, and for that, the government provided 30 billion euros. Again, a guarantee, not spending the money. Now, one more point is on page 19 is a support for startups. And here, I know, of course, you don't want to end startups during the Corona crisis. You want to have startups also now, because they are a very dynamic part of the economy, and they create new companies later on. So there are maybe not a large chunk of the economy, but potentially they are the ones who move forward growth. And the problem here is, of course, normally you don't provide a loan to a startup, because most startups, they collapse after some years. So you need to have equity, so that if the company evolves well, you have a large part of it and you get a lot of money for that. And the federal government is not specialized in looking on how these companies work. This is very difficult. There are specialized people for that, venture capital funds. So the idea of the government here is, if a venture capital fund provides, let's say, 1 million for a startup, they would put another 1 million and be also a co-owner of the company. So it's a matching facility. Yeah, but the whole checking, the whole assessment, the risk assessment, the opportunity assessment is done by a venture capital fund who have the knowledge of that, and the government matches the money and becomes a co-owner. And they provided 2 billion for that. And there are also other possibilities, but the main idea is to go through these venture capital funds. And now the tax and regulatory measures, you know them pretty well. I would say they're similar as in Ukraine. You can pay taxes later, things like this. Yeah, I mean, the VAT for restaurants is now 7%. It's lower. These kind of things. But one important thing on page 21 is actually protection against insolvency. because you really don't want to hundreds or thousands or 10,000 of companies to become insolvent now. You don't want that. It will create problems for the recovery. It will create problems for the administrative and judiciary system. So what to do? Normally in Germany, if you are the manager of a company and you know you are over in debt, then you have to declare bankruptcy within 3 weeks. And if you don't do it, that's a crime and you get in big trouble. Yeah. Now this is changed. If you are now have too much debt, over indebtedness, you don't have to become insolvent. You don't have to declare insolvency. You have time till end of September to declare insolvency. Of course, I mean, it makes sense for one side. At the same time, it means when you're dealing with companies, you might be selling products to a company which is insolvent and you don't know that. So it creates risks. But I think it makes sense because otherwise you would have tens of thousands of insolvencies and you don't want to have this now an extra burden and extra problems. This is also something which could be interesting for transition economics. So overall, I think we have the need for quick measures, and these measures were quick. Of course, after 2-3 months, it will be possible to criticize and say, yes, you could have done this better. This is not really the best way to do it. But of course, you have to understand, government was under huge pressure to do things. And not everything is perfectly designed, but at least it works and it helps companies. And that's the important part. Of course, it will become very expensive. It's a lot of money. But at the same time, it will help the recovery afterwards. Because if companies go bankrupt, the recovery will be much lower. Because at the end of the day, the recovery is done by companies. And if a company does not exist anymore, then the recovery will not come. And that's why the idea is support companies, and then once the crisis is over, this will go up very quickly, the so-called V-shaped recovery. And then, of course, you have higher GDP, higher revenues, and then the debt to GDP ratio will decline quickly. That's at least the idea. Now, a short overview in page 24 of the financial instruments. And you see here quite good this targeting. Yeah? We have some instruments are mainly for large companies, like the syndicate finance, the economic stabilisation fund. Some are for SME, medium-sized state, small ones. Some are only for micro enterprises. Some are for all. For example, short-time work allowance is for all companies. Supplier credit insurance is for all companies. Yeah? So there are very broad instruments, there are targeted instruments. And you see here, there is a very balanced approach so that everyone has some support at the end of the day. And of course, the cost, that's the not so nice side of the story, but a necessary side. We don't know how much short-time work allowance will cost. No, they're very difficult to estimate, but at least the reserves for that are 26 billion. This money is already in insurance, in the employment insurance, and this money could be used for that. For the freelancers, micro, it's 50 billion. Up to now, they use 10 billion. This kind of instruments, but these are mainly guarantees, so it's not budgetary expenditure. This is 450 billion. Economic stabilization fund, 600 billion, and so on. So we have, at the end of the day, 1,150 billion euros, which is a huge amount. But again, not everything goes through the budget. Immediately, budgetary expenditure will be short-time work allowance and, of course, the grants. That's the immediate cost for the budget. I mean, the budget will have huge problems because of the revenue side. Yesterday, we had the estimation of the revenues, and revenues this year will be 100 billion euros lower than the estimation, 100 billion. So it's a huge shock. This is just the expenditure side, but the revenue side will, of course, be very strong. So that's the presentation, and of course, we're looking forward to the discussion. Thank you for your attention.
Thank you, colleagues. Now I would like to take a possibility to present Ukrainian efforts to support the economy to Gleb Vyshlinsky.
Thank you, Andrei. Thank you, colleagues, for presenting German plan. And Andrei, could you please switch the screen to me? Because now I see you. I will not present anything like as formal and detailed as colleagues from Berlin did, but I will rather react to the picture of German tools that were used and compare them to the Ukrainian ones. Like certainly we had a different situation in the economy before Corona crisis started. We had much higher share of shadow economy and much lower share of bankable small and medium-sized enterprises, which meant that on one side, like many companies were like their real revenues were not seen by the government, and they could not be eligible for products, for banking products or guarantees like the ones that were introduced in Germany by KfW, and I understand rather successfully. And simultaneously for micro businesses that are in many cases organized as private entrepreneurs with very low taxation, that like the system of simplified taxation for private entrepreneurs in Ukraine being not only simplified, but in fact like the preferential system of taxation with like total tax burden of just 5% for majority of them. Like there was really small space to give them some tax breaks. So what Ukrainian government did in this case, and like to rather like did it right, I could say, was focusing more on employees and like the most and on employees and also on those micro businesses registered as simplified, registered as private entrepreneurs, including those in simplified taxation scheme. And it meant introducing the instant system for unemployment, for paying unemployment benefits, while rather small. And I should say that for those people who were working in shadow economy, the maximum sum they could get per month is 1,000 hryvnia, which is certainly not the payments that could be something that covers even basic needs for working people. However, the simplified procedure for those who were working officially helped them to start getting much higher unemployment benefits rather fast. The first tool that was presented by Ricardo is like very similar, like the short-term work allowance is very similar to the one that was introduced in Ukraine, but the problem was that like I understood that in Germany it is a standard tool, and it was just like organized in a way to be faster and more efficient and like working in some instant form during this crisis. In Ukraine, there was no such tool before. and with very low capacity of Ukrainian civil service, change in government, like everybody knows that for a strange political reason, Ukraine changed its government just directly before the corona crisis in Europe at the beginning of March, and it resulted in like very big delay in introducing, in like real introduction of this tool. Only starting from the 4th of May, it became possible to submit this requests of small and medium-sized enterprises for this short-term work allowance. And I should say that in Ukraine it is limited only to small and medium-sized enterprises. And the Ministry of Economy reported that by 12th of May, only 7,000 enterprises submitted requests for such an assistance, like compared to 700,000 of enterprises in Germany, so just 1% of those enterprises that already benefit from this in Germany. And by 12th of May, Ministry of Economy says that only 1,500 of those enterprises received okay from the government to proceed with this. Like we had no grants for micro businesses, but we like those private entrepreneurs working in this micro business, as these micro businesses, they received a small tax break in the form of not paying the single social contribution, which is in fact like the sort of contribution to the pension fund. That is small, but for really smaller and the most for those enterprises, for those micro businesses that were hurt, like even this like up to 1,000 hryvnia was important. However, I should say that like what we see is that like those policies are rather patchy. Like there are a lot of employees, a lot of businesses that are not covered at all by any of those policies, especially those in hardest hit industries like airlines, for example, or hospitality industry or restaurants, and generally like with many like very nice political statements. In fact, the real policy on the ground was like we need to protect lives of our people, and you businesses need to deal with your problems yourself. So those businesses and those employees that were hurt in cases when their enterprises were not able to pay them money for in the period of when they were not working, like they were just sent to unpaid vacations. However, I need to emphasize here that, and it will be like my final comment, that we had a rather different like very different quarantine, very different lockdown here in Ukraine compared to majority of European countries. We had a ban of operations of a rather limited number of industries, like restaurants, retailers, excluding food retailers and pharmacies, and passenger transportation. However, we did not have any restrictions of work for industrial companies, for companies working in agriculture, and also companies working in freight transportation, in construction. And the only issue for smaller businesses was that public transport is not working in Ukraine already for 2 months. So only larger enterprises enterprises, including those owned by oligarchs, were able to organize the transport for employees. Which means that, in fact, when comparing economic decline in Ukraine in April, for example, Germany to Ukraine, we could find that, in fact, the economic decline in Germany could be even higher in April, because we have a very large share of commodity producing enterprises that were not dependent on supply chains like agriculture or ferrous metals industry, and they continue to operate with the only limit they had been decline in external demand, decline in global demand for their products. So let's see, however, this situation have shown to Ukrainian businesses, especially SMEs, that they still should not rely on the government, and they could not rely on the government, and they need to have some financial resources for crisis, for black swans that could emerge in any moment in Ukraine or globally, and as in this case. Thank you.
Thank you, Gleb. Now we have a Q&A part of our webinar. So we get one question at the moment from Maria Repka, my colleague from Center for Economic Strategy. So she asks how all these costs will be financed and what the budget deficits in terms of % of GDP for 2020. Yeah, so maybe you can comment it.
Yes, how this is financed? The question is quite easy. This is debt financing. So the government issue bonds, and Germany had a very clear saving policy, fiscal stability policy for many years. And the consequence is that there is much room now for taking up new debt at very low interest rate. The interest rates are really very low, I would say even negative sometimes. And it's not a problem at all to raise debt on capital markets. The rating of Germany is still AAA. There is no question about this. So that's not really a problem, at least technically, to raise the money. Of course, you have to pay the money back, but the possibility to raise the money are there. And of course, I think that this is much better than now increasing taxes or something like this. The moment this would create an additional shock to the economy and would create lots of problems. So debt financing is the answer, and Germany can do that. Regarding the GDP and the budget deficit, I think it's really difficult to forecast this. We had before 0%. It was always the black zero, as it's called in Germany. So it was a surplus, always a small surplus. I said yesterday it was 100 billion euros less revenues. Yeah. That's what, about 3% of GDP or something like this. So 3% is just the loss in revenues, 3%. And then on top comes the expenditure. And the expenditure depends very much on how long the crisis continues. So we will definitely talk about whatever, 7% of GDP. It's a realistic forecast, but of course, you don't know all these loans that are provided, will they become bad debt or not? So there's much questions on that.
Maybe I can jump in here. As my colleague said, so it's very hard to give exact numbers due to the uncertainty, but around 7% deficit coming from zero, from the black zero, the famous black zero, That's, I think, the best guess at the moment. But again, this is not just the expenditure, the extra expenditure, as Ricardo pointed out, but also a huge loss in revenue, of course, due to the crisis, because Germany will be probably also hit by a 6-7% of GDP decline, similar to Ukraine this year. And regarding the measures that have been taken, only part of it is reflected in the budget, as was said. Another part is simply the guarantee framework, which of course also needs to be approved by Parliament, the guarantee limit, but which will probably not to that extent also really spent in future or in this on future budgets, but it's just a guarantee, right?
Yeah, the financial amount, if I mentioned this 1,150 billion, this is more than 30% of GDP, but this is no spending, this is guarantees, equity, so it's more like investment, it's not spending. So this is the range of the whole package is about 30% of GDP. The GDP, the deficit, it's about 7%. That's the short answer, yeah.
We have several questions appeared in our chat. So I would like to ask you, first of all, how are German policy steps comparable with the measures that adopted by other EU members and the EU as such? And at the same time, how you see post-crisis policies? So will there any austerity programs implemented?
Well, Germany has, we haven't looked at experience in all countries, but of course, the fiscal possibilities in many countries are quite limited. I mean, you have to see, Germany had a debt to GDP ratio when the crisis started of about 60%. Italy is over 100%. Yeah. Greece is much higher. France is also over 100%. So the possibilities for these countries to raise additional money are more limited, because at some stage, investors will say, look, will I get my money back? Yeah? If you provide loans to Greece or to Italy or to other countries, what's the limit? How much can they really afford? And that's why these countries have some limits. They don't want to get too much debt, then the interest rate will go up, and this will have a negative impact on the budget also long term. And that's why the German measures are, broadly speaking, much stronger than in many countries. And actually, this also creates some problems with the EU Commission, because some countries in the EU are now claiming that Germany is doing a sort of industrial policy, and they are strengthening the industry in the crisis. And after the crisis, the position of Germany will be much stronger relative to the rest of Europe than before. And Germany was already very strong. And after the crisis, it will come out even stronger relative to other countries. And that's why some of the measures have to still be approved or checked by the EU Commission if they are okay in terms of competition. Yeah. And, of course, all the measures Germany takes, or most of them, they have to be provided the okay from the EU Commission, because it's our subsidies, and subsidies can, of course, have an impact on competition. And we have a market here, a common market, internal market in the whole EU. And of course, subsidies is an issue. And the question is, are these subsidies legal or are they not?
Mm-hmm.
Thank you. We have also two questions that focus mostly on Ukraine and Ukraine-EU relationships. So first of all, it is, as Ukraine now fulfills all conditions for EU financial aid and sees EU ready to provide 500 million euros, big question is, when will IMF approve its program, and how urgent is Ukraine needs for international money? Maybe, I don't know if you can comment it, or maybe it's Gleb can comment.
Yeah, I can start briefly. I mean, Yes, a macro-financial assistance from the EU is on the table, but my understanding is that first we need an IMF program for that. So far, Ukraine has made yesterday a big step towards, or the day before, a big step towards an IMF program by fulfilling the last prior action when adopting the banking law. And assuming that this now is signed into law and the IMF deal will go through maybe during this month, at the end of the month, then I think EU can follow. But so far, I think there is not yet a macro-financial assistance from the EU. They will wait for the IMF, as will the World Bank. That's my understanding.
And how urgent?
Yeah, and about the urgency, I mean, the deficit more than tripled, right, in the new budget, and that's more than $10 billion, and that comes on top of refinancing external debt, external public debt, and they need the money. They need the money from the IMF, from the World Bank, from the EU. But I mean, I think we are okay if the IMF comes this or next month. I think there is no way to fear a default. That's I think pretty much then solved that issue. And maybe they regain market access also by cooperating with IFIs.
Yeah, I could add that really the probability that IMF program will be approved by the end of May is rather significant and very significant, close to 100%, and it will mean receiving the first tranche of up to $1.8 billion on the verge of May and June, and this will be enough to go through the period of external debt repayment, and then it will allow for the last tranche of previous macrofinancial program, EU macrofinancial program, to get to Ukrainian budget, and also for the first tranche of the new macrofinancial program to be received by the Ukrainian government. And like I could say, the chances that we will receive the second tranche this year is also rather significant, and this will be needed for both debt repayments starting from September, but also to finance budget deficit. Like the general estimates of all official financing that we could receive this year is somewhere between $7 and $8 billion, and generally it could be enough to fund external debt repayments and also to fund the budget deficit. But it looks like that it will still not be fully realistic to finance 7% of GDP budget deficit. My personal opinion is that it is also that Ukraine will not have 7% budget deficit this year. Like we saw that the current government, that is very weak, is not able to even to spend money on directly fighting coronavirus in Ukraine. In the first 2 months of like fighting the virus, in fact, March and April, the general government spent just 450 million hryvnias, which is peanuts, which is like 3 times less than local government spent on fighting the virus. Like when you have 3 ministers of healthcare in half a year, it really results in very low capacity even to spend money. And like it is the same for all sophisticated instruments of supporting business that we could imagine in such a situation. So plus like during the period of inactivity, a lot of budget programs, including investment programs, which is like it was another question in chat I see about investment focus priorities of budget spending in the next 12 months. I believe that like it could be rather high chance that it will really be a lot of spending on roads, for example, on on budget-funded construction projects because they are rather easy to organize, and it is rather easy to finance via large companies that are that know how to receive public money in Ukraine. However, like all other like sophisticated financing programs, my colleague Maria Rybko, who is on this call as well, on this webinar as well, like she did an analysis showing that in fact cuts that were made to the budget of in 2020 for financing of different new funds, like for example, the fund for financing scientific research, the fund for financing regional development, all new, like I could say, reformist, transparent funds were cut to large extent because last year those funds were not be able to spend the money that was allocated to them. Like the government was not really able to spend money. So my opinion is that we will have something closer to 5% of GDP budget deficit this year, which will, and it will be more or less in line with financing that Ukrainian government could receive. The biggest risk is that if Kolomoisky will try to still get control over his bank, his former bank, during coming months, and will put a pressure on the court system, including constitutional court, and the constitutional court will make the decision faster than we will receive the second tranche in early autumn. Then we could have really big problems, especially if it coincides with the second wave of coronavirus infections that is predicted by many analysts.
Thank you, Gleb. Maybe any other question somebody has? At the moment, I don't see any additional questions to our speakers, and the time actually is ending. So. Yeah, we actually ask the question about policy steps at the beginning. So thank you for your time. It was quite interesting discussion. Video is published on Center for Economic Strategy page. And we will also translate the main points into Ukrainian and put it on our website. I thank our colleagues from German economic team. Maybe you have any closing remarks?
No, I mean, of course, our main job is actually to provide consultancy services to the government in Ukraine, and that's the main focus of our work. Our team with Robert and Gary, they did a very good work on the estimation of the impact of the crisis and the channels and the sectors. That was a very important step. And of course, now the big question is what should do the government? And I understand the focus, the social focus. I understand that, of course, they have to support employees. But I think that they need badly, the government in Ukraine need badly a concept how to support business. Yeah, because at the end of the day, if business has big problems, the whole country has a big problem. So it must be a balanced approach. Yes, social policy, yes, but also economic policy. I think that's a very important part.
So thank you, and join our next webinars on our Facebook page. Thank you.
Yeah, thank you for organization.
Thank you.